Alright, hello everyone. How are you? It's Kei. This is the 8th of February 2023 on Wednesday. So I hope you're having a great day today. Thank you so much for joining today as well. Okay, so looks like markets are ranging today, but let's check the markets. And also I took a live trade yesterday on the EURUSD. If you haven't watched that yet, you can watch the archive on yesterday's live stream. But I took the EURUSD and I exited with a small loss. So first, let me talk about how I exited, and then screen charts after this, and maybe discuss markets together. So let me see who's here. Let me change the screen. Alright, Master of, thank you for joining, good to see you. And Carvan, and Misomba, good to see you. Robert, good to see you too. And Homan, TikTok, Rain, James, and John, Chia, Islam, and everybody else, good to see you. Thank you so much for joining today. Yeah, so first, let me talk how I exited the trade. So let me share the screenshot, because every time I enter exit, I take screenshot. Okay, so just hold on. January 2023, February. Yeah, already February 2023, EURUSD. Okay, so first, this is how I exited my trade yesterday. So I took the trade to sell here, and so they was downtrending in a 4 hour and 1 hour. It was downtrending, so I took sell here, and then the market initially went down towards my direction, but it was only running 10 pips or so. So this was still too tight, too small to set the break-even line. So I left it, and after that, the market had a small W bottom on M5 and the neckline breakout. So I didn't exit yet because I didn't see the exit confirmation, but I saw the neckline of W bottom breakout. So I thought the market may continue to retrace. It was in my head. Exactly on this white bullish candlestick was a neckline break. So that was my mind, but I didn't exit because 4 hour was still going down. So I was trading the 4 hour, so as long as 4 hour points down, I continue to hold. So then after that, the market went up gradually. So I was thinking that I exit when it breaks here. And this is something I mentioned in the live stream yesterday, that when it breaks it, I would exit there. So I kept holding, and then the market gradually went up, and there was a gold cross stochastic. I took originally the dead cross to sell, but then I have a gold cross, and then the market go up. And also there was this wasn't the N wave, but it was more of an I wave, but the market never went down. Instead, it just going up. It just kept going up this way, and then broke the previous resistance on M5. So this white candlestick was exactly where I exited my trade. So 4 hour was still down, but since M5 retraced, I exited. So again, my position was here. I took sell over here on this blue line, and my stop loss was here, up here. So I exited in the drawdown of 1.2%. So that was my trade. So that's how I exited my trade. So the lesson here is that keep the losses small. Because if you don't keep the loss small, then even if you have some big profits in the future, the big profits may not cover the previous losses. But if you keep the losses small like this, then if you have 50 pips or 100 pips or 200 pips of running profits, then it covers the previous losses, is my strategy. So in this particular trade, to stop loss, I took 2% of my account, and I exited with a 1.2% drawdown. This is 1.2% drawdown. So I lost 20 pips, but because of my risk management, my drawdown is kept small. So yeah, that's how I exited my trade. So again, I was following the 4-hour downtrend. So my mind is that once I take the sell here, then I expect the market goes down on the reversed N waves. So the possible reverse N wave in this situation was here. There was an I wave down, and then pullback, and so that the market, I thought it's gonna go down. So if the candlestick, if the market was broke, if the market broke the support on M5 at this timing, then it may have gone down this way continuously. But it became W bottom. It didn't really lower, but became W bottom, and the neckline has been broken also. So even if I see W bottom, and unless I see the neckline break, I will still keep holding. I mean, my view is still bearish, because sometimes it will be resisted by the previous resistance level on M5, and then goes down this way too, if higher time frame is still bearish. That's usually the case. But in this case, it didn't happen, but instead it broke the neckline and then kept going up this way. So I closed my trade when the market broke the previous resistance on M5. So that's how I exited my trade on the EURUSD yesterday. So here is also the screenshot when I took an entry. I did it in live. So 4-hour, higher time frame 4-hour was down. In terms of Ichimoku, you see the Kumo Senko span A is down, and Kumo thickness is okay. This is not too thin, not too small Kumo, so this is okay Kumo to follow downtrend. And Kijun Sen is down also, and Tenkan Sen is also down, and Chikou span below candles. And I think Senko span B was also down. And these lines are down just because it broke the support. And then 1 hour. 1 hour support level was broken also, and there was a nice pin bar breakout in 1 hour. So that was also one of my confirmations, one of my findings to take the sell. So again, in 1 hour also, Kumo thickness was very nice. Senko span B down, Senko span A down, and Kijun Sen down, Tenkan Sen down, and the Chikou span below candles. And that's why I took the sell here, right? Yeah, so I was expecting the continuous N wave bearish this way. So this is the trend follow strategy. Mindset is that I always take trades when the market is trending based on Ichimoku and higher time frames. And whenever I see a range in higher time frames, I simply stay away. So I will be very selective on which timing to trade and which pairs to trade. And once I'm in a trade, then my mindset is to follow the major direction, which is downtrend in this case. I follow downtrend and follow as long as possible. But then, once the market starts to reverse, I exit very quickly. So my strategy is that I take the higher time frame, either 4-hour or the daily time frame to follow. So In terms of the time frame to follow, I take the high time frames. That's the more of the day to swing trade. My target is based on the day to swing trade, but when it comes to entry and exit, I use 5-minute chart. So in terms of entry and exit, I am a scalper. But in terms of the trend follow, I do in a day to swing trade. In this way, automatically, my risk and reward ratio overall becomes bigger. So that's how I manage my trades and my positions. So whoever traded yesterday with me, I hope you exited very soon. I hope you didn't keep holding until the market hit the stop loss. Because usually you will find an exit timing before the price hit the stop loss. Yeah. Oh, and also the reason why I didn't put the stop loss here was because this was my exit place. I think I said this also on yesterday's live also, but I said I would most likely exit when the market breaks that level. So by placing my stop loss higher to here, then I don't lose the whole 2% in this way. So again, I usually risk 2% to the stop loss. Again, this is my SL and this was my entry sell. So 2% I take the stop loss, and if I exit here, then that will be close to the 50% drawdown. So that's more safer in that way. But don't just exit too early, right? Just because you see W bottom here, if you exit it on the W bottom here, then the market may start to go down this way too. So at least you wait for the neckline breakout and exit. That was also one of the exit timings. Here is the neckline breakout. But then if I still see downtrend, then this neckline break may be fake on M5. It may start to go down again at some point. And the reverse may be one of the Fibonacci levels between high and low on M5, and the reverse may happen on one of the Fibonacci levels like this. But if the market breaks the previous high on M5, then for sure the market is now range or uptrend on M5. And that's why I exited my trade. So like this, in terms of exit timing, it has to be logical and step-by-step approach. Never exit just because the market just goes up or down. Never do that. We have to think logical and rational and objective to the markets. And also what's more, the losses are the part of the process. And if you keep the losses small, then future profits can cover your losses is my mindset and strategy. And that's why I mentioned here to become a non-losing trader mindset. Yeah, if you keep a non-losing mindset, then it becomes much easier to win trades in the long term. But if you focus too much on the profit side, and if you forget about the losing side, then it will be difficult to make profits in the long run. So I think the risk management should have to come first before you start to make profits. And that's why I emphasize a lot about the exit timing and the stop loss management and the exit timing. I mean the small loss mindset. Yeah, I think because I used to, it's kind of funny thing that looking back my own trading journey, when I first traded in my career about 10 years ago, I never put the stop loss. I didn't know about the stop loss back then. It's kind of a shame, but I didn't know about the stop loss because all I cared was whether the market goes my direction or not. And if I put the stop loss, then if the market goes back like this, I would have to fix the loss. But if I didn't have the stop loss, then I didn't fix the stop loss. So let's say the market may go up and then go down again, then I make profits. And that was my strategy before. And I kept doing it and I lost so big. I've lost so big, and then I learned the risk management and the use of the stop loss finally. Yeah, but then I had the very wide stop loss because I was afraid for the market to hit a stop loss. So I used to take like 100 pips of stop loss, or even, I don't know, 150 pips of stop loss back then. And then so that the price most likely doesn't hit the stop loss and the market goes my direction at some point in some day and hopefully make profits. But it didn't work well also because again my stop loss was too wide. And because my stop loss was too wide, let's say the market just goes up in range at 50 pips above your position when you sell, then your drawdown is really big. And you may not be able to place another positions in the markets because you have no margin. You may have less margin, so you may not be able to enter trade again unless you close a trade. So that was also my difficulty, how to manage the loss and the stop loss. And then, so after some losing years, I built my own strategy, which now is called KTS, and I started to implement the Ichimoku and the price actions and multiple time frames, as you can see now, and things start to make more sense, and things also became more simple. So like this, I again take the 4 hour or the daily, and 1 hour or M30, and take entry on M5. Usually I take M5 for my entry, but sometimes I take the 15-minute time frames. But yeah, recently I only take M5 for my entries. But yeah, so that's the whole mindset. I think this is I think the core of my strategy is that yeah, I'm really good at the risk management part and the psychology management too. Yeah, also I used to look at these tick movements a lot. Let's say the tick move just breaks the support, then I thought it's a support breakout, and I used to lower the stop loss, and then the market hits a stop loss very soon. So unless I mean after that I make sure to wait for the candlestick close, as also became my rule to take trades. So anyways, there are so many big lessons in my trading career, but trading itself is very interesting because these candlesticks are a whole psychology of the traders and the markets. Every time I see downtrend, every time I see the breakout, you know what I think is that I can hear the scream of the buyers. The market goes down, market breaks the support, and you see the bigger candlestick, and this is because no sellers are here, but this is because the stop loss orders for the buyers were taken, and that's why you see the big candlestick and the breakout. So whenever I see the breakout, I can hear the scream of the buyers when it's downtrending. So it's all about psychology of the traders in the markets, and we have to eliminate our bias and simply try to hear how buyers are thinking and how sellers are thinking in the markets. And try to understand the patterns in the markets based on Ichimoku and also the price actions. And then things will make much more sense to you, I'm sure. Yeah, but yeah, so that was how I exited my trade on yesterday, Euro USD. So yeah, let's say today, I was only watching the Euro Swiss franc because it was downtrending, and it is now downtrending. So let me see, daily chart is going down to the Kumo now, and it's breaking the support on the daily time frame, which is on 0.9874. So I have to delete up arrow anymore because this is no more uptrending. So this is down, and this is very close to the previous daily support. So it may be supported and goes up. And then I check the 4-hour time frame, and 4-hour is now becoming range. I mean, it becoming retracing, because simply Kumo Kijun Sen are flat. I do check the Kumo shape. Kumo shape is okay, this is thick, and Kumo shape is okay, but the direction of the Kumo, direction of the Senko span A and B are flat right now, and Kijun Sen is also flat. And when I see the Kumo Kijun Sen flat like this, that means the balance between the buyers and sellers are 50-50. So if it's 50-50 buyers and sellers, then most likely the market won't break the support. But instead, buyers may come in and the market may retrace back to the Tenkan Sen is my feeling. So unless I see Kumo down, Kijun Sen also down, I don't feel comfortable to be in a trade. Yeah, and then I do check 1 hour, and 1 hour is pointing down now. So in terms of 1 hour base, it's bearish. So sellers are dominant in 1 hour, but not in a 4 hour. So what it means is that this means within the next 1 hour, I mean 4 hour candlestick will close in 3 hours and 35 minutes. And it's flat. And 1 hour is closing in about 35 minutes. So that means if 1 hour, I mean if the market doesn't break within the next 35 minutes, there will be 50-50 balance again. So we may not be seeing the breakout anymore, is my feeling. So I'm just talking about the power balance between buyers and sellers based on what I find on the Ichimoku. But so if it goes up, then it may retrace back to the 1 hour Kijun Sen or the 4 hour Tenkan Sen in this case. So that means right now is not the perfect timing for our entry. I mean, technically we can enter by trusting the 1 hour and by expecting the market breaks the 1 hour support. So more precisely, 1 hour support is now on 0.9867, but if you expect the market breaks the support within the next 33-34 minutes, then you can take trade. But if you don't feel comfortable to take trade now, then simply wait for the next 33-34 minutes to see if it breaks. If it starts to break down, then you can be in a trade. So Ichimoku or KTS, my strategy will tell you exactly when to hold, when to wait, and until when to wait to trade in the markets. So this requires patience, but you know, I think being patient is much better than losing. So that's how I approach the markets. Okay, I do see many comments. Thanks so much for joining, everyone. Good to see you. Yeah. So Euro Swiss franc, I keep my eye on this one because it may break the support. But in the meantime, let me check other charts. I have screen charts a couple of hours ago, but these were all ranging. And this is my third time screening charts. And this is at 6:30 p.m. in Dubai time here. So usually after I finish live stream, I check charts maybe once or twice until I go to bed and see if I see some trends. But yeah, looks like all ranging now. The markets are becoming very tricky. Yeah, so USDJPY is now going against the downtrend anymore. So yeah, let's see. Pound USD is now in the Kumo on the daily. Pound JPY is flat. Pound CAD is also in the Kumo. So the markets are becoming very choppy. Oh, Pound Swiss franc, I'm waiting for the support level breakout of 1.1079. If that happens, I think the market goes down to the weekly Kijun Sen. So that's Pound Swiss franc. Yeah, let me see. I think the markets are very tricky now. Yeah, at least there are no trends in the markets. So yeah, let me see some comments now. Okay, while monitoring the Euro Swiss franc. Let's see in the 4-hour time frame if it breaks or not. Okay, yeah, thank you so much for joining. Good to see you. Alright, Ichimoku, Alex Wong, Alexander, TSM, Son Lam, Augustine, Win, Yuvrash, Ichimoku, thanks for joining. Good to see you. Alright. Yeah, Ken Lee, Mark, good to see you too. Alright. Alex says, I think January until now there is no good trade to trade. Many breakout end up retrace. What do you think? I think so too. There are some big trends on pound pairs. Like pound USD went down very nice in a 4-hour. Well, this was due to news, but after that, for the next 8 hours, it was downtrending. So, and also pound CAD was also, we see some downtrend. In January also, there was some uptrend in pound pairs. Pound USD also went up here between 18th, 17th of January. And pound CAD also went up in the 17th and 18th of January. But then it just went down. And pound AUD was also having some downtrend here. So I've seen pound pairs are okay, but now it's not okay. Now they are all ranging. Pound Swiss franc also had nice downtrend too in January and February. So we do see some nice trends still. But we don't see many trends in many pairs. Okay, Alexander says, that's why I love Kei's strategy, higher time frame for trend confirmation and lower time frame for entries and exits. Right, yeah, that's how I see charts and that's how I take trades. Before, I was only depending on one single time frame to trade, entry and exit. But then my stop loss became too wide and my exit timing became too late, or my entry timing was not so precise. And that's why I started to use 5-minute confirmations for my entries and exits. Just to make sure that my entry becomes more precise and I can get exact entry timings and exit timings too. Because if you think about it, the trend follows based on the higher time frame. So let's say in this case, this is 4-hour time frame, but this is downtrend based on the waves, because we see consecutive bearish waves. So this is downtrend on the end wave. So now it's retracing back. It's retracing, but the price is now being resisted by the Tenkan-sen, the blue Tenkan-sen, and also there was previous support is becoming resistances now. So the market may go down this way too still. This is the trend follower mindset. And this is what you can see only based on the 4-hour time frame. But if you look into the lower time frame, you may see N wave bullish on M5, M15. So when you see that, then that is the confirmation of the retracement, and you don't want to enter trade. You want to wait for the 5-minute to be aligned with the 4-hour direction and enter trade. So the trend, the market follows the bigger time frame, higher time frame trends direction, but the new trend starts from the lower time frames. So if M5 start to show N waves like this, then, and if it goes up this way continuously, then 1 hour may start to flat to be up, and eventually if it breaks the Kumo in the 4-hour, then 4-hour becomes bullish. So the new trend starts from the lower time frames, but the markets tend to follow the major direction. And that's why I use lower time frames for my entries and exits. And that's how I exited on my Euro USD trade yesterday. When I see the potential reverse patterns, potential new beginning of the new trend, then that's when I exit basically. Because it may go up continuously, or it may range after this and then lose the market direction after this. So that's basically how I exit, and that's why I take M5, because only if you take the 4-hour only, then you may not see that. You may not see if this is a reverse pattern or not. So that's why I use M5 to confirm that, and that becomes my exit timing with a small loss in that way. Yeah. Thanks so much for joining, everyone. Good to see you. Kizito, Rajesh, good to see you. Okay, James says, have had a few losses and break-evens recently. Max drawdown has been 0.76%, has been getting a bit hard mentally last few weeks. Okay, I think max drawdown of 0.6% is really small. It's really small, so there's nothing to worry about. Just keep the losses small, but just keep trading with the same rule, same strategy, then you should be fine. Yeah, but sometimes we feel it's a loss because, let's say, even if the drawdowns are small, if you lose 3 times consecutive, then you may get discouraged or you may get frustrated. But only think about the percentage, not the numbers of losses. Yeah, we have to focus on the numbers that are important. Yeah, to do that. Yeah, alright, but Sam, thanks for joining. Good to see you. Okay. John says, was the month of February of last year also showing retrace markets? No, I didn't. The last year in the month of February was really good. I saw some big trends, but this year we'll see. Okay, CDJPY is range. This is range, so I'm staying away from the market now. Oh, but the gap was filled. The gap and also the resistance level was violated now, so this may turn bearish. This may turn bearish this way. Okay, Albert says, if you see a break like what happened in a pair since a Powell comment, what would you do? When you enter the market, maybe we could use pound USD, euro USD as example. When I see, you mean the breakout, right? When I see the breakout, then I don't jump into the market usually. And I do look at the Kumo shape. And if the Kumo shape is too thin, then I don't jump into the market. Usually when the market breaks the support resistance really fast, that's when we see the Kumo to be very thin. So for example, maybe here, there was a Kumo breakout bearish in the 4 hour, like in this condition. But then, so it broke the support. It broke the support, and this may go down, or even the next candlestick maybe. Yeah, so when I see this, the last candlestick was bearish, and it seems like it broke the support, but I don't jump in because Kumo is too thin here. So I do look at the Kumo shape and decide what to do. Alright, yeah, let's see. Holman says pound CAD in M30 seems okay after breaking up 1.6217. Yeah. I guess we just have to wait for some new breakouts, looks like. But today we have no big news, so the markets may be quiet. Alright, Brandon. Anyone in Japan wants to connect and trade with K? Yeah, right now I'm not in Japan, so yeah, but yeah, I may be visit Japan in April. We'll see. Okay, Ross says, hi K, I'm monitoring the coffee chart currently. There seems to be a ascending P wave on 4 hour and 1 hour. Also, Kumo break twist bullish. The weekly is still down. Does this mean it's just retracing? Okay, let me check the coffee market now. Let's see. Coffee is oh, here. Yes, I have it. Okay, so you say weekly is daily ascending P wave. Well, actually, this is not an ascending P wave, but this is a potential N wave now. This is a potential N wave that we see here. But let me check the 4 hour also. Hold on, let me delete this up arrow. 4 hour is now has been supported by the Kijun Sen on these 3 touches. So I think this is bullish still. It's bullish. So I think the market will be supported by the Kijun Sen and goes up this way. Yeah, but now this is in the P wave, technically speaking. And I think the P wave will be broken bullish in this case. Kumo is bullish. The market has been supported by the Kijun Sen and the Chikou span above candles. And in terms of the weekly time frame, this is yeah, it looks like it broke the previous resistance. So this may turn bullish. If it goes up, then the target is on the weekly Kijun Sen, 192.73 will be the target in this one. So let me put up arrow like this. So that will be the scenario for this now. Okay, Alexander says, I know you only trade Forex, but for this time, can you review the MSFT stock? It's trending on a daily and 1 hour. Stochastics good and it's break band walking. So if daily and 1 hour is up, both ones are up, then that's a good chance to look for the buying edge. Yeah, so if you get the 3 confirmations, that's when you can enter trade. But in terms of the stock market, I don't recommend you to use M5. M5 may be too small, so you might want to use M15 to look for the confirmations. Okay, do you know what indicator BNF uses? I am not sure. I am not even sure if he trades still or not. He used to use Bollinger Bands and moving averages. Okay. Tui says if you use time M5, then you must stay all time to look the chart. Then you can exit right time. Yeah, that's what I do. Yes, I do use M5 for my entries and exits. Yeah, but I don't stay all time. I never stay all time to monitor the charts. Okay, can you share which binary option strategy did you use? Oh, I don't even remember which strategy I was using. I was totally newbie and I was using too many strategies back then, so I don't even remember which one I was using. Oh, Albert, you're welcome. Yeah, no problem, no problem. It happens. I managed to be able to read the comments, so it's okay. Yeah. Okay, Roberto says AUD NZD potential uptrend. Okay, let me see. AUD NZD. NZD. Oh, hold on. Sorry, I have to type again. Add it. Okay, so oh yeah, AUD NZD is up now. Yes, daily chart, it shows bullish. It broke the new high today, so it's been bullish. After the Kumo breakout, this pair has been bullish. The only thing is now that the price is near the previous resistance, which is 1.1046. So you may want to wait for the breakout and buy. There was a previous resistance and a support in this area, so it may retrace before it breaks. So just be careful on this one. Okay, James, you're welcome. Augustine says, Kason, I may be wrong in my analysis as I'm still novice in trading, but why do you think we are going through these upward patterns and trends since mid last year? One of the reasons I think whenever the news happens, the market goes opposite direction. That's one of the reasons. Due to what's happening in the economy and also the news result and the policy change in the US, etc., is making the markets confused. So that's why we see less number of trades, less number of trends in the markets, I think, and they become very tricky these days. Okay, Ross, you're welcome. Okay, Bitcoin. Yes, BTC USD is currently retracing. So yeah, so the daily time frame, still Kijun Sen is up and the Kumo is up still, but Kijun Sen will be flat soon. Tomorrow, Kijun Sen will be flat. So then the market may retrace. So yeah, up until here, I was saying that this is bullish, but the market may turn flat to retrace, I think, in the short term. So this is not a good timing to buy yet. And I'm not really sure how long it continues to consolidate in this case. I mean, it may consolidate it may continue to consolidate until the price touches the Kijun Sen, while Kijun Sen remains flat, and then be supported and goes up. That's one of the scenarios. But then Chikou span will touch candles, and that's also the confirmation of the range. So then the market may range continuously. We will see. But in this kind of case, the breakout may happen whenever some news happens in terms of this crypto or in terms of the news in the US. And then the market may break that resistance. But we'll see. Okay, Golf says, hello K, is USD base pairs looks like they are about to retrace or take a breather like Euro USD and Pound USD on the weekly. Yeah, I think they are about to retrace, right? And they are changing towards a new direction, I think. Yeah. Alright, WT, would you look at the USD CAD or did you already cover? I don't remember, so let me check again. Let me check. USD CAD daily chart is now flat. It's ranging. And 4 hour is also ranging, so no direction. I think the possible scenario is to wait for the 4 hour resistance breakout, 1.3471, and then that will make the Kumo up, Kijun Sen up, and we may see some buying opportunity. Otherwise, I think the market keeps ranging for this week. Okay, Tuan says, can you help me see VN30? Okay, VN30 is here. Weekly time frame is showing that the market is now, okay, this is flat on the weekly in terms of Ichimoku, because Kumo flat, Kijun Sen flat simply, and Tenkan Sen still below Kijun Sen. So in terms of the price action, it's bullish, N wave, but overall, based on Ichimoku, it's range. But then I can see that there was a 2 supports by the Tenkan Sen. So here it may be supported by the Tenkan Sen and goes up, along with this bullish N waves. If so, then let's see, based on the daily time frame, you can wait for the breakout of that resistance, 1141.89 to buy, or you can even wait for the support by the Kijun Sen and expect the breakout. And Kijun Sen will turn bullish tomorrow and the day after. So tomorrow, the day after, I think the market will be bullish, but that will be in a very short term analysis. Yeah. Okay, so that's my analysis for this one. Oh, Alexander, thank you for the reminder for the like button. So if you liked it so far, please press the like button before you leave. That would be great, so that it keeps me going. Thank you very much. Augustine, you're welcome. Yeah, it really messes up all the technical analysis and patterns we use to read the market. Right. Yeah, so when the market seems to be very messed up, then the best answer is just to stay away. And this is where traders tends to lose money, is that the markets are ranging, no opportunities, and they rush to trade. They make up the confirmations and take trades. Because if you do, then there's no consistency on it. There's no discipline to it if you make up the confirmations, or if you suddenly start to apply new strategies. So I say, rather than losing, it's better to stay away. But I think it requires patience to do so. Even myself, I am a full-time trader, And I say my full-time because the trading is my main source of income, and that's why I say full-time. So whenever I don't take trades before, I was really frustrated. I was always looking for the way to take trades every day at least. But now, even if I don't trade for a week, my mind is really in peace because I know the market's moving every day and I know there will be some big trends. Until then, I just sit down and wait for the chance to come. So it's like hunting, hunting. So yeah, I don't really, trade every day in that mindset. Okay, so sorry, I lost the sound, sorry. So yeah, thank you very much for joining everyone. Great to see you. It was nice, very nice seeing you everyone. So for those who are joining public, I will see you tomorrow. And for those who are Ichimoku members, I will see you soon at the Ichimoku membership live, which I will be covering the Kyushu Ashi as a weekly topic. Okay, so until I see you next time, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.